Hello and welcome to the 17th edition of the COVID-19 Update webinar from your One Voice team based in Washington, D.C., but coming to you from different parts of the country. Today, at least I am. I'm up in Maine, and I'm the only person on from Bracewell. This is Caitlin Sickles. I'm playing both roles, mine and Paul Nathanson's, this week. And of course, we are joined by the talented and entertaining guys from the Franklin Partnership as well. We were just talking about before we jumped on that it's hard to believe that this is the 17th update, but it is. And as everybody on this call and webinar knows, the guys at the Franklin Partnership are your on-the-ground team in Washington, D.C., representing the interests of small and medium-sized manufacturers here in D.C. And then on the policy resolution group at Bracewell side, Paul and I support Omar and John with effective public relations and social media outreach. Today, we have a lot to cover as usual. We'll be covering mostly agency updates, but I'll hold any more reporting on that for Omar and John to cover, and I'll flag for you that today's webinar recording can be found on our One Voice Info website. You can find this recording as well as the slides today and the presentations from all previous 16 updates, as well as a few other webinars that we've curated from different groups. That's what you can find on the website. I am going to turn it over now to John. John, take us through what we're going to cover today, and then kick us off with the latest guidance that we've got from agencies.
Great. Well, thanks, Caitlin, and thank you, everybody, for participating once again in our bi-weekly webinars. We're going to talk today about some of the government resources that we use to share the information that we utilize every 2 weeks with these webinars. Update you on the CDC guidance on travel restrictions as businesses start opening up again. There's some guidances out there on travel restrictions. Update you on OSHA investigations. We're going to talk about the president's executive actions, the enhanced unemployment, and then the information on the payroll tax. We're going to talk about where the status is of the 3 major lending programs out for small businesses to participate in. We're going to update you on the PPP interim final rule. There's a couple aspects there, and then conclude with the latest update on negotiations, discussions that are taking place in Congress right now about a phase 4. Feel free to, and then we'll end up with questions, but feel free to ask any questions in the box on the right-hand side of the panel. Feel free to ask a question during the course of our presentation, and we'll try to answer those questions, as we go through the presentation moving forward. So, what are the government resources? Here, folks, we're giving you the recipe for our secret sauce. These are the websites that we utilize on a daily basis that we track and follow what the guidances are moving forward, whether it's Department of Labor, OSHA, CDC, IRS. These are valuable resources for you that you may want to utilize with your HR departments as well, moving forward as future developments. Some key things, obviously, the Department of Labor is all about workforce. IRS, we know, is about taxes. OSHA can speak for itself. Interestingly, there's some notes on the slides here where the CDC and IRS, those notices are date stamped, so it's very helpful. The OSHA, the most recent guidance is on the top of the website. So this will help you moving forward as we go into uncharted territories what to do. So the CDC travel restrictions. As we had mentioned at the last webinar, CNN has a very good website on what to determine what is your state, the travel restrictions in your particular state or particular city. But here they said, as businesses start moving into normal business operations and your sales staff, for example, are going to start traveling, they made a recommendation, make sure that your staff know whether or not COVID is spreading in your destination. Are you living with somebody at risk of COVID? Do you have, or are you taking care of somebody who's at risk of COVID? And so you may want to reconsider your travel destinations based on those recommendations. But most importantly, as the CNN website clarifies, many states, cities and states have their own specific guidances, some calling for 14-day quarantines and such. And so basically know before you go what the requirements are. I mean, it's not just travel restrictions, but it's also face mask recommendations as well. And then on the OSHA front, OSHA is continuing its enforcement, and we just want to make sure that the members know that this is moving forward. Here are 4 examples from various states. Essentially, if your employee comes to you and that they have been asked to quarantine, you should allow them to quarantine and give them the paid sick leave that is allowed under the Families First Coronavirus Response Act. These are examples of where OSHA has said that these employers had to pay the paid sick leave for quarantine, whether they had a note from the doctor or not. Examples and several other examples. And so use this as a resource. Be careful as you make decisions on what is an allowable leave time for your employers or not. But the OSHA has been very generous moving forward on allowing the employers to take the emergency paid sick leave. Omar?
Yeah, that's an important point, as we're all just trying to do the right thing, but keep in mind, as some parts of the country are starting to reopen, OSHA certainly is resuming enforcement. Just here on the next 3 slides, if we could quickly, on where we're looking at telework issues, and then we'll get into childcare as schools are starting to semi-reopen in some fashion. This was a new guidance that came out from Wage and Hour Division, WHD, over at Labor Department earlier this week about must-paying employees for teleworking. And this is important. There's a couple of items we wanted to have folks take away. As always, we're not labor lawyers, but we're just trying to give you the latest that we can coming from the government here. So if there's work being performed at home, it's clear now that the employee must be paid for that. If the employer has reason to believe that work is being performed at home, even if that time is not being reported by the employee, it is incumbent upon the employer to track that time and pay the employee for that time. In this guidance, this is a notice that didn't go out to the businesses, but rather went out to the regional administrators, meaning those that will be responsible for enforcing this for DOL, WHD around the country. And effectively, they're saying that the employer should come up with some kind of a system here to track that anything that's being done in telework, and so that way they can make sure the employees are getting paid. You don't have to go in and inspect their house, but you do need to come up with some kind of a system of what they're telling you here. And that bottom line that we underlined there in red as well, an employee may not waive their rights to compensation. So that's something to take a look at there. 15 years ago was somebody with their BlackBerry rolling over in the middle of the night typing, and 10 years ago was just doing maybe a quick FaceTime here, or 5 years ago on the weekend. Well, this is now really formalizing a lot of this. So be cautious, be careful. Please make sure somebody in your HR department gets this slide deck, especially this slide and these next 2 here as well. Some of us here on this call, we do have young elementary school age children, and having them deal with a Chromebook is frustrating enough. So now how are you going to deal with the employees trying to manage that as well? This slide and the next slide are really important for when you have an employee whose school is now participating in remote learning. This slide puts out the hybrid model, whereas in some school districts, they're having a couple of days a week in person and then a couple of weeks doing fully remote. This says that the employee is eligible for paid sick leave for under FMLA expanded under the FFCRA that was passed by Congress. So this is important to note, that if on the days where they are permitted to go to school, however, you may not claim it. So there is definitely a distinction. If they're remote part of the time, you can only get your paid leave coverage for the days when the school is effectively closed to you, because you have to be remote with that child at home and not for any other reason, and there's no other person to help take care. So you're going to want to layer this one on top of, I think FAQ might have been 63 or so, where they talk about the 14-year-olds. So this is important for those, but this is different. This is on voluntary, where you do have, before they made the decision in our school district, they asked parents, would you voluntarily send your kid? This is not allowing you to take paid sick leave if you have the option to send your child to school, because technically the school is not closed. So that's an important trigger here that we want folks to keep in mind as you're looking at different school districts that you might have for a different employees. So you might have an employee next to each other, but their kids are in 2 different spaces. You school districts with rules, you should definitely take a look and get this over your HR folks so they can manage that as well. And John, this slide here really is just more for informative as we segue into some unemployment of where just a recent survey showed where are some of the folks that are reporting why they're unemployed, especially since some of you know them, but a PMA member just sent us a picture of a Tennessee industrial park with 9 signs saying we're hiring.
Wow, yeah. So the next few slides, we are going to talk about unemployment. This slide clearly shows the reasons why unemployment claims have been filed. 160 million because of reduction of work, 85 million because the business is closed. And so there's a wide variety there moving forward. Let's talk about enhanced unemployment. As all of you know, the $600 enhanced unemployment benefits expired on July 30th. That has been a major point of contention during the discussions on the next stimulus package, which we'll talk about in a minute. So what the president did with one of his, he did 4 executive orders, but 2 specifically impact manufacturers important on this call. One is the extension of unemployment, and then I'll turn it over to Omar to talk about the payroll tax deduction. So what the president said was, we're going to offer $400 of enhanced unemployment on top of your current state unemployment. We're going to take $44 million out of FEMA. I ironically took the money out of FEMA the week that the Hurricane Laura hits Louisiana and Texas. But and then of that $400, $100 has to come from the state. And so your state has to sign a contract with FEMA indicating that they will take advantage of this program. Here's a list right now. Roughly 30 states have actually signed up for this unemployment program, but we do want to caution, just because they signed up doesn't mean the money's flowing. We believe the only state right now that is actually cutting checks is Arizona at this point. Many of these states have to reprogram their computer systems to allow this new unemployment system program to move forward. And so we anticipate in the next few days and weeks that additional states will sign on to this program, but keep an eye on that. Then there's an interesting memorandum that the Department of Labor ended up sending out, just reminding employers and those who have been unemployed that those who receive unemployment benefits, that unemployment benefit, enhanced and regular unemployment, that is taxable income. And so this is just a memorandum reminding the folks that this is taxable income. Now, a recipient of unemployment benefits can voluntarily withhold taxes, and if they fill out a W-4V, voluntary withholding, that the unemployment offices will take out a 10% tax on that moving forward. So we think this is important, even if you've laid off those employees or furloughed those employees, and hopefully you want them to come back. You don't want to leave them in a lurch come tax time. And so if you are in that situation, we recommend that you may want to pass that along to some of your employees, especially the ones you want to bring back. So Omar, we're still waiting on some guidance on the payroll tax. What's the latest on the president's executive order on the payroll tax?
Yeah, you could have created a drinking game out of we're still waiting on guidance every time we said that with what's going on between PPP and everything else. Yes, we are still waiting on guidance to implement the president's executive memorandum that was issued on, I believe, August 6th, or now a couple of weeks ago, with regards to the payroll tax deferral. No, we covered this a little bit 2 weeks ago, but we just want to reiterate, no, we do not have further direction from the Department of Treasury and the IRS with regard to that, at least not as 9:30 this morning when we last checked. And so you are still in limbo coming into September 1st, which, yes, folks, is a few days away. So as of right now, we do have, for those that are having a payroll tax deferral for employees, that the president is offering to help put cash in the pockets of Americans. In doing so, though, we still are uncertain because of the confusion. The Treasury Secretary, since the executive memorandum came out, has said that it will be optional for employers and employees may opt out. So again, as last week, we advise you talk to your tax professional about if this makes sense to you, especially if you don't want to overly rely on the fact that it is just a deferral and not a holiday. As we mentioned, the executive branch cannot on its own, regardless of who's president, just can't make it a holiday right away. That's why they can only make it a deferral, and this will have to take an act of Congress. What we're hearing from the Hill remains consistent with what we heard the other day, is that they don't think that they're going to proactively up on Capitol Hill make this a full holiday out of concerns of what it would do to the Social Security trust funds that are out there and depleting some of those. So what we're hearing is that were Congress to make this a holiday, most likely they'd have to just bail out American taxpayers if too many of them participate and are on the hook and cannot pay it back, when the business and the employer has to go in and claw that back from the worker later on, post December 31. So that's the concern here with the deferral. So most of the CPAs which we're talking to, since we obviously aren't those, they are saying that you'll be very careful, see if it makes sense, figure out if you're going to continue to pay it or you're just going to withhold it on behalf of the employee and see where it goes. But that's a tax strategy you definitely want want to talk through with your staff and your CPAs to make sure you don't get in any trouble that's out there. So please, again, this one needs additional review. If we do, we're hoping today, frankly, is Friday, we're hoping to get a review on this today or get the additional guidance. As soon as we get that, we'll make sure we get it out to everybody that's participating in these webinars. But John, not such good news when it comes to the MSLF and then the idle and some of the phantom companies getting money over there. Where are we on the Main Street Lending Facility?
Just remind everybody, the Main Street Lending Program is run through the Federal Reserve Bank of Boston, and this is where they're lending out $250,000 and more. So manufacturers can get loans of $250,000 and more. However, having a hard time getting off the ground, they've only issued $472 million in loans out of a pool that has been reserved of $600 billion. $472 million out of a pool of $600 billion. One of the problems is there are not that many lenders who are participating in the program. Only 522 lenders that are participating in the program. This is a far cry from the 5,400 lenders that have participated in the Paycheck Protection Program. And so we had touched on in a webinar about a month ago. We talked about the websites that you can go on to determine in your particular state what banks are participating in the Main Street Lending Program. Then the EIDL program, the Economic Injury Disaster Loan Program, that is a program, just to remind everybody, this is where you can get a loan of up to $150,000. They used to have a $10,000 grant, but money has run out of that program. And this program is continuing to chug along in a pretty successful rate. 3.5 million loans have been issued so far, totaling $184 billion. So those of you who are, who may be looking for additional resources, not necessarily something above $250,000, this may be a positive, a valuable resource for you, because the PPP program has expired as of August 8th. Now, Omar and I will talk about in a little bit what we see in the Phase 4 stimulus bill. We do believe the PPP program will be extended, and there will be most likely a second draw moving forward. But when the program expired on October 8th, there remained $128 billion left in the account. So know that each of these programs are still moving forward, and we'll continue to keep you updated on what the status is on the, as a result of the stimulus package. But Omar, there were some there's an IFR and additional background information regarding forgiveness application and such regarding the PPP program.
Yeah, that's right. And one area where we did get some additional guidance on this, and we're going to talk about some key upcoming dates in a moment that'll help tie together some of the challenges we're facing on PPP and some other provisions with the CARES Act expiring. But here on these next two slides, just a quick assistance here, that looking at where we just came out earlier this week on the 24th on the IFR is an interim final rule, basically the guidance that implements the statute. So here we are on ownership stake. This one's important for those of you, there was a little bit of confusion earlier. We know one company, for example, that's a pass-through with over 70 shareholders, where all of those shareholders going to be subject to some of the PPP ownership requirements that were included in there on owner-employee compensation rules. And the answer is no, they're creating a 5% ownership threshold. So again, for your ESOPs, so we have got a few of you there. And then also for maybe the multi-generational families, make sure your CPA or whoever's handling your forgiveness application is aware of this ownership structure clarification for you that's out there. And then looking over at rent payments, this is another one for our multi-generational shops especially. We know of countless companies where maybe the family, the trust, or a holding company or another entity owns the building or owns the property, and then the manufacturing shop itself pays rent. So this is something where you want to take a look at what's actually forgiven. And again, you want to look at your specific situation in terms of also keeping in mind, is that holding company doing nothing else but accepting rent? Therefore, that one obviously didn't ask for the loan most likely. But again, what are some of the eligible payments if it's a related party? So make sure you've got somebody at your CPA that's taking a look at this, or your CFO that's looking at it. Okay, we own our shop, we own versus we own the land and then rent it out. So just make sure somebody's checking on this, and maybe there's another opportunity here for some of the forgiveness items. But speaking of PPP, John, before I run through some key dates, what are you thinking? I'll give you, and I think you and I are in different places on the timing of the bill, so you might as well go first and be more pessimistic than me.
Yeah, so here's a list of some of the key dates moving forward that we're anticipating in September. I point out September 4th, that is when the August jobs report is going to come out. Both sides are looking at that August jobs report as critical metrics in in determining which way the negotiations go. If there is a large job growth number, and determine what would be considered a good jobs number, I would argue between 3 and 5 million new jobs created in August, would help Republicans try to keep a stimulus package to be very small. A bad jobs number, low job growth or job loss in August, helps Speaker Pelosi and the Democrats' perspective that they need a larger bill moving forward. So that is one of the first key dates moving forward. The other one is September 14th. That is the first time you're going to have the House and Senate together moving forward to negotiate what that next package is. Clearly, negotiations can continue between now and September 14th when the House and Senate are back in session, but they're only in session for a short period of time because we've got the Jewish holidays and such, and we've got presidential debates taking place in September. The other critical date, which we've mentioned, is September 30th. That is the day that the government runs out of money and they have to pass a continuing resolution. There is some thought that the next pandemic will be tied to the government continuing resolution to keep the government funding, because both sides don't want to see the government run out of money. And so that may be considered a must-pass piece of legislation, and perhaps both sides may plug their nose and just vote for it to keep the government funding and provide the next stimulus package moving forward. I am a little pessimistic. Omar is more of the optimist. I don't think it'll be September 30. I think they will pass a short-term CR, hit clean, continue negotiation, and perhaps sometime in mid-October, just before the election, where the president will they come back with a deal, as long as there's individual direct contributions moving forward, so Donald Trump can tell the American people that they're going to get a check in the mail like they have in the past with the signature on it, and they're going to get that just before the election. Omar, what do you say?
Yeah, no, I am for once the actual optimist in this situation, and the reason being is I do believe that the president wants a deal. I think that that's just in his nature. That's why people elected him to make big deals, and this is another opportunity to do so. I think, frankly, what's holding him back is the Chief of Staff, Mark Meadows. And if he were not in the room, this likely would have been done about a month ago. I mean, you can even see Pelosi casting shade on him yesterday, saying, "What's this guy's name? Who are they sending to talk to me?" So yesterday there was a phone call at 2:30 that lasted 25 minutes between Pelosi and the White House Chief of Staff, the first such communication in over 2 weeks. So that tells you of where they were. They basically had not been talking in a couple of weeks. Pelosi apparently has gone down from initially they were at 3.4 trillion. She dropped her request down to 2.4 trillion, and now in yesterday's call was willing to go down to 2.2 trillion. The White House is still stuck at around 1.2 or so, just shade under that. And so the Pelosi speaker is asking the White House to come up to 2 trillion and call it a day, since she came down from 3.4. So what we're looking at from that standpoint is they haven't made a whole lot of progress. I do believe they are closer on the back of the House issues, such as the PPP program, making sure we get taken care of on deduction of expenses that we'll talk about here on the next slide. But for the most part, they are still pretty far apart on some of the big ticket items. But what's holding them back is the amount of spending. I do think they'll get a deal. I think talks will probably start towards the end of next week, with staff probably talking over Labor Day weekend. And I do think we might get something by the Jewish holidays sometime in the near future. So that's at least my standpoint, which, as John mentioned, as you take a look at on this slide, those are the key dates that we've got coming up that I know is causing a lot of stress to our CFOs and CPAs that are out there. A payroll tax deferral is supposedly supposed to begin here just a couple of days on September 1st. John mentioned that jobs report coming up on September 4th. That's a week from today at 8:30 a.m. So get ready for that to come out, and we'll get a better sense again to John about which way the political winds may be going. I do believe the political pressure is increasing with folks out there are really struggling. And especially as the $600 has gone away and the other states aren't kicking in the $300 and $400 yet. So I think their political pressure will come. So that's why I do believe by the Jewish holidays we should get there. Two other things that we want to point out here, and we just got one question that we'll answer while we're on this slide related to it. Before I get to that, I don't know how many of you have this. If you wouldn't mind reaching out to us or shoot us a note in the question box, how many of you are doing or have a 7A loan or a 504 SBA loan that you've had pre-existing to COVID? So the reason we're asking is Section 112 of the CARES Act, that comes up and expires on September 27th. They allowed for 6 months that if you had an existing SBA 7A or 504 loan, that the government would pay your principal and interest payments into September 27th. So we're just we've heard now from 2 companies in the last 7 days that have asked about this upcoming deadline and whether we think Congress will extend it. We are not hearing they plan on doing so. But please just shoot us a note if you do have a 7A or a 504 that would be impacted, as some staff on the Hill are asking on that. So this gives you an idea. I think John did a nice job running down where we are at the end of the working our way backwards from September 30th. But we're hoping the next time we have a webinar with you all, whenever that may be, we'll get a better sense there. So there's one question that just came in while we're on this slide. Do you believe correcting the IRS on deductibility of forgiveness-related expenses will be an add-on to the Phase 4 bill? The answer to that is yes. We do have commitments from 3 of the 4 top tax writers on Capitol Hill and from others that they do want to overturn the Treasury Department ruling on this, and we do believe that if and when a bill goes, that we will get a correction and you will be permitted to deduct your expenses, even if your loan is forgiven. Now, the advice that we can't give, because we're not CPAs but are giving anyway, is that if you don't need to submit your forgiveness now, you shouldn't be, because one, you've got 10 months to do it. Congress is likely going to make some significant changes to forgiveness and to your eligible costs we discussed 2 weeks ago, and they might also take care of this. Now, in the meantime, yeah, your CPA should probably be telling you, continue to move forward and treat your expenses and deduct them as you normally would. And if Congress doesn't fix it, then you go back and retroactive. Because again, this doesn't affect you until you have your loan forgiven. So it's a question of timing, not just September 15th, but also beyond that to when you do that. So please stay in touch with your CPAs. We'll let you know on that. But John, you heard directly from Treasury. Well, we got pushback. You got heard from a senior staffer on that one.
Yeah. What we are looking at, and there are 2 basic discussion points moving forward. The House Republicans and Mark Meadows, the President's Chief of Staff, wants to do a skinny bill. And what would a skinny bill look like? Well, it'd have liability protection. It would have individual payments. It may have money for the post office. It may have money for PPP, the PPP program. And then there's the larger bill that Omar clearly talked about with the HEROES bill, which is the $3.5 trillion that Pelosi has moved down to $2 trillion. What we are looking at in the PPP extension is we're looking at an extension of the current program and then a second round. And so for those who've already accepted the PPP loan, you'll be able to go back for a second round of loans with some restrictions. It'll be limited to employee size. The House, I think, is at 100, max to smallest businesses, 100 employees. The Senate is at 300. Then there's going to be some sort of revenue loss test. And the House is going to want a 50% revenue loss. We're fortunate that Senator Rubio has reduced his revenue test from 50% down to 35%. So those are the 2 main areas in PPP moving forward. We are continuing to push for a long-term low-interest loan program. We recognize that manufacturers are burning through cash, utilizing the PPP program to keep their people on payroll, and that when we slowly get into normal business operations, there may not be the necessary capital. And so that's why we're continuing to push for some sort of long-term loan program. Omar, do you think it's going to be more of a skinny bill, or do you think it's going to be more of a comprehensive bill?
I think we got one more shot at this. To your point, John, you could very well be right, along with others that say we're not going to get a bill at all. And so I don't see Pelosi doing anything skinny. If we go there, go big or go home. And I think I do think they're going to get something done. So in the end, I am a little bit more optimistic. Hopefully around September 15th or so, around Labor Day, we'll get started and get something out there. And because there's a lot of questions that are still hanging out, we'll answer a few of them. But Caitlin, if folks aren't sick enough every 2 weeks by now on 17 webinars, how else can they get a quick update in between?
Yes, if you're not getting enough on this webinar, and if you want more opportunities to hear Omar the Optimist, you can check out our Talking with One Voice podcast. We have episodes that go up every other week. So when we're not doing the webinar, we're doing the podcast. On our latest episode of the webinar, you can listen to me do my victory celebration for being right about the Kamala Harris pick and discuss what else to expect in the upcoming, at that time, it was upcoming conventions. In our next episode, I think you'll probably hear our reactions to what we heard at each convention and what people can expect, not just on the policy, but also on the politics side, as of course we get closer and closer to the 2020 election. You can find that wherever you find your podcast.
But John, donations are always helpful for associations right now as well.
Yeah, if those of you on this phone have appreciated these webinars and have found them value to your operations, we hope you will contribute to the Advocacy Fund for PMA and the GAF Fund for NTMA. There are links on this page that you can make online contributions. And Obviously, we know these are difficult financial times for all of us, but as an organization, we are providing these webinars to you free of charge as a resource to demonstrate how important communication and knowing on what's going on in Washington does have an impact on your businesses. And so those of you who have the resources and have found value in these webinars, we hope you'll contribute. The links are attached.
Thanks all. And here they are again on the question slide. As always, please feel free to type in a question or in the bar or in the question box on the right. We'll try to answer what we can. If we cannot, we will follow up with whatever we can come up with later on. So as you're doing that, anything you want to also shoot to us, you obviously have our contact information. So let's just go with the 4 or 5 that we've got, mostly on the PPP. Starting at the top, my CPA recently told me that when we have spent all of our PPP funds, we are done, even if that occurs prior to the end of the 24-week covered period. Is this accurate? We are counting on using eligible costs for all the 24 weeks to make sure we get forgiveness. So essentially, this is our issue still on why we don't have full forgiveness. Now, Treasury has said that you can come out, or Treasury Secretary has said that you can submit your application at any time. So if you are done and spent all of your funds and believe that you are where you want to be on your forgiveness FTE head count and on your wage return, then you go ahead and submit it when you're done at 13 weeks. Now, your banks will say, how are you going to do that when the FTE reference period has either a December 31st or a 24-week reference point? Now, that's the other issue that you've got. Now, the Treasury hasn't fully caught up to what Mnuchin has said. In a large part, they aren't coming up with the new guidance on these areas because they believe Congress is going to change it. There is an important change that we are working to secure in that bill that is currently in the language pending. It will allow you to look at your coverage period and basically, yes, submit it when you've done and you've expended your funds. So you do not have to, they'll clarify, you do not have to wait for your entire period. But as of right now, from when to submit your forgiveness application, we still are advising you to wait until we get a better sense of what's going on with the entire government, with the congressional change. I mean, the same question is also coming in along that lines with regards to what do I do with my head count? Similar, if you are using your 24 weeks for PPP, when are you able to reduce the head count without it reducing the forgiveness? Is it after you've used all of the money, after 24 weeks, or at 12/31? This is exactly the fundamental question that we've been trying to get out of them since the end of July. Most of the language, there's been some disagreement with me and some CPAs and what actually applies. Most of us do believe it's after the covered period ends, not December 31st. I think we do have some additional clarification. So now you come back to, is it the full 24 weeks or is it when you've expended your funds? So again, right now it's still unclear, and I know some of you are trying to decide, do you retain employees? Again, many of us do have that reading is once you've finished your covered period, then you can reduce your headcount. Now that is, some CPAs are saying, let's just wait and see what Congress does just to be safe. And so you obviously want to take the advice of whoever's going to be fighting this for you. So they're not entirely exactly clear on where they're going right now with that. A couple other areas with regards to the PPP template. So another question came up. Yes, so from an advocacy standpoint, we did not put out action alerts last week during the Dems or this week during the Republican convention. Early next week, you'll get notice from us with a note you can say to your members of Congress dictating some of the policy priorities you want in there, from another round of PPP to some of the tax provisions that we need to get changed that are out there. So we are still waiting, unfortunately, on some of the guidance to come out again, but we just don't expect, frankly, a whole lot more than what we've gotten with regards to the specific on forgiveness timeline, especially knowing that Congress is going to make significant changes if and when they do get around to a bill. Another one, Tennessee Department of Health has issued new guidelines requiring a 24-day quarantine for people living with someone that has tested positive. With this being different from the federal, is it enforceable? Typically, I mean, this one you're going to want to talk to the lawyers, but you're going to want to follow the CDC being the more stringent. Typically, what's safer is always safer legally is do what seems to be the safest and the more stringent requirement. So in this case, you aren't going to want to come across, because if you're going to be investigated not just by the Department of Health, but potentially investigated by federal OSHA, you've got two separate problems to deal with. So while you're trying to comply with one, you are going to be in clear violation likely of another. And so you're going to want to watch, usually again, just like when you're taking your driver's test, answers whatever's safest. In this case, follow the CDC and the OSHA. Now, to that extent, obviously there was a hiccup this week when Fauci was under anesthesia for surgery and the CDC changed some guidelines that they've later reversed. after some outcry. So it seems like give it a couple days of cooling off period before we figure out what's really happening is unfortunately the situation right now with some things.
Omar, I mean, but this example is similar, but not identical, but similar to what's happening in the Northeast, New York and in the Northeast about their 14-day quarantine before you come visit that particular area. And so I'm thinking, yeah, that state requirement might be enforceable.
Yeah, it's enforceable, but then you'll be violating the federal law. So you're complying with just one at the risk of another is not something you want to be doing. So you're going to want to take the course of action that will put you in the maximum amount of compliance possible, and that's complying with the federal guideline.
That's right, I agree.
Any other questions that come off? Again, you always feel free to shoot us an email. Please, again, the links are there to donate. Thank you to those that already have. We do appreciate your support. The association does make sure these things keep on happening. We'll be in touch on the next webinar, whether it's in another 2 weeks. We certainly will have one before the end of September, but we'll be in touch. Best to all over the next Labor Day holiday. Please reach out to us. Anything we can ever do to be helpful. Bye-bye.